Hello guys, and welcome to the beginner's guide for the Relative Strength Index RSI indicator. In this video we're going to talk everything RSI. You're going to know everything you need to know about the RSI and the best and most effective way to use it. Now without further ado, let's jump into the video.
Alright guys, and we're currently on a live chart. We're on the daily chart for the GBP USD, and before we talk about the Relative Strength Index or RSI indicator, we're going to go into the Indicators tab, and we're going to type either RSI or Relative Strength Index, and we're going to click it as we see it. Now we have the RSI plotted on our chart, and this is what the RSI looks like, and we're going to maximize it just so you understand it more. Now the RSI is a momentum indicator. It's a technical analysis momentum indicator or oscillator. It measures momentum. Now momentum is both the speed and size of price changes. Now the RSI is plotted on a scale from 0 to 100%. We have three different bands. We have the upper band, we have the middle band, and we have the lower band. Now many traders use the RSI in their trading strategies in order to identify overbought and oversold areas. Now anything above the upper band is considered overbought, meaning that the asset price is currently very expensive, so other traders are looking for sell opportunities. And if it's below the 30 band, it means that it's oversold and the asset's price is very cheap and other traders are looking to buy this asset. So what you need to know is that 70%, 30% overbought, oversold, and RSI length are set to default, but of course it's customizable according to your likings, but we're going to get to that in the settings tab of the RSI. But for now, I just want to tell you that if you want to follow this overbought, oversold strategy, what you need to do, or what I recommend you do, is that you never open a position when you are in either the overbought or the oversold region. So let's say, for example, that current RSI is in the overbought region. You only open a sell position once the RSI penetrates the upper band and gets back in the RSI range once again. Then you would open your position, and the same goes for a buy position. If it was in the oversold region, you never want to open a buy position unless or until the RSI penetrates the lower band and gets back into the RSI range. Now one thing you need to know is that the RSI is a secondary indicator, so I do not recommend you use the RSI on its own, because following such a strategy on its own will generate a lot of false signals and will wipe out your account balance. So in this video I'm going to show you the best way to use the RSI indicator, but before we get into that, we're just going to go over to the settings tab of the RSI, and we're going to go into inputs, and we're going to see the RSI length is set to 14. The RSI is a calculation and the number is customizable, but by default it's 14. It means that it's taking 14 periods into its calculation. 14 periods mean that 14 candles from previous price data, the most recent 14 candles, into its calculation to give you the RSI reading. Now you can put it whatever you like, but I honestly recommend that you keep it into its default settings. And as we go into the style tab, we're going to see the RSI upper band is set to 70 and the RSI lower band is set to 30. Now those are your overbought and oversold regions. Now 70-30 is by default, but you can of course put it into 80-20 or 90-10, but I honestly recommend sticking to a 70-30 overbought, oversold, or 80-20. But for now we're just going to be sticking to our 70 and 30, and we're just going to untick the RSI based moving average, which is the yellow line, just to not make it more complicated and just have a clean looking oscillator. And in this video we're going to concentrate on the most important thing, or the best way to use the RSI, which is RSI divergence. Now there's something that you need to understand, is that there are two types of indicators. There are leading indicators and there are lagging indicators, and the RSI is categorized as a leading indicator. Now what are leading indicators and what are lagging indicators? Leading indicators are indicators that precede price action, that move before price action, such as the on balance volume indicator or OBV, and lagging indicators are indicators that move according to price action, such as moving averages. Now, the RSI is categorized as a leading indicator, but in fact it's a mixture between both. The RSI can be a lagging indicator and a leading indicator, because the RSI reading is actually a calculation based on previous data from previous candles given by price action. So you can use it for both, but it's a leading indicator because of divergence. Now, what is divergence? Divergence is when spotting early reversals. It's spotting early reversals by the RSI and price action moving in different directions. Now, most of the times you see that RSI follows price action. It moves exactly like price action moves. So as you can see here, price moves down, the RSI is moving down, price moves up, the RSI is moving up. All right, now this is the normal movement for the RSI, but RSI divergence is a very strong signal that the current trend is running out of momentum, which means that a reversal is very possible to happen. But of course, just like the overbought oversold strategy, if you want to incorporate the RSI divergence into your strategy, you should use it as confirmation, or use it with confirmation from other indicators. And now we're going to do some technical analysis. I'm going to show you the absolute best way to use the RSI indicator. Okay guys, so we're on the GBP USD daily chart, and as you see, we're currently in an uptrend, and we've recently broken the trend line a few days ago. So this means that we have an opportunity to jump early on probably a reversal move. So first thing we need to do, as I've said earlier, we do not want to be using the RSI on its own. We need to use the RSI in conjunction with other indicators. Now, this is a daily chart, so the amount of data given in this uptrend is actually more than a month, because each and every candle represents one day. So without further ado, let's get into the analysis that we're going to do. And if we zoom in to see those two highs, first thing we need to look at as the highs. So we start off by highlighting this high. This is the first high, and we highlight this second high right here. And just for simplicity, I'm going to go ahead and name these highs as number 1 and number 2. Okay, just so you can see, just so you can understand easier. So we need to connect these two highs, connect the highs of these two highs. As you can see, number 2 is actually a little higher than number 1, so there's a slight slope to the upside if we connect these two dots, or we connect these two highs together. But we come to connect these two highs on the RSI to check for divergence. So this would be our first high right here, and our second high would be right here. All right, so as you see, if we connect these two lines together, as you can see, it forms a downward slope. So on price action, number 2 is higher than number 1, yet on the RSI, 1 is higher than 2. So this is divergence. This is what we call an RSI divergence, where RSI and price action move in different directions. The RSI is not following price actions. This means that the current trend is running out of momentum, so it's probably weakening. In other words, they say it's running out of steam. So the uptrend is weakening and a reversal is very possible. Now, we don't want to rush. Whenever you see a divergence, don't jump into a trade, but make sure, because as I've said earlier, the RSI is a secondary indicator, so you need confirmation before jumping into a trade. Now, I'm not going to talk about this or focus on this topic very much, the topic of technical analysis patterns. And as you can see right here, we have actually formed what is known as a double top, which is a reversal pattern, a double top pattern alongside a divergence. So a double top pattern confirmed by a divergence is very strong. It's a very strong indication that prices are most likely going to reverse. So this would be our support line, and those are our two highs, our two double tops, 1 and 2 alongside divergence. So what is going to happen, or what should happen, most likely prices are going to go down, and probably this is what the double top would consider, is the price might go a little bit down, probably retest the support level and continue its move downwards. Now I don't want to focus on the double top very much, because this video, the purpose of this video is the RSI, but I want to show you how to correctly use the RSI in conjunction with other indicators such as technical analysis, candlestick analysis, continuation and reversal patterns, trend lines, support and resistance, because this is the correct way to use the RSI. Using the RSI on its own will generate a lot of false signals and will let you easily empty out your account balance. So if we let the chart run, we would see that it happened and it actually retested, and price actually reversed and went all the way down to the previous lows right around here, and probably even lower and lower. So this is the first example. We're going to go on over more examples just to clarify this more and more and make sure you understand it and actually be able to apply it to your trading strategy and test it out for yourself.
Now we're going to go over another RSI divergence example, but in case of an uptrend. So just so you know, we're currently on the USD Yen daily chart, and we are currently in a downtrend. As you can see, we're making lower highs and lower lows, which defines a downtrend, and I've spotted this divergence right around this area, and I'm only going to start by highlighting the lows that are a part of this divergence. So this would be our first low, this over here would be our second low, and this over here would be our third. Somewhere around here. So if we connect these lows together on the RSI indicator, we'd see that the RSI indicator has something else to say other than price action. Price action is going downwards, RSI is showing upward movements. This is divergence. When the RSI is saying something other than what the price action is saying, it's not actually following price action movements. This signals the lowering of momentum in this downtrend and a very possible reversal. Now I wouldn't just rush into this trade. I need confirmation. As I told you earlier, we never want to take trades based on RSI signals alone, because RSI is a secondary indicator. We need confirmations from primary indicators such as trend lines, support and resistance, price action analysis, all that. So what we'd wait for right here in this situation is that if you could see right around this area right here, we have a resistance area over here. All right, why is a resistance area? Now as you see, we went down, we made this first low, we went up, tested this area and retraced again, and again tried again to go up, test this area, retraced again even stronger, and then tried to go up, and now we are actually consolidating around it. We don't know, do we go down or do we go up? So I would take this position if a long bullish candle smashes through this resistance area and closes above. It would give me an indication that, hey, there are buyers in the market, and you just saw your RSI divergence. So that's enough confirmation for me to honestly just jump into the trade. So if we let this trade run and see what would happen, if you see right here, we did get that candle, and I'm going to highlight this candle right here. I'm going to highlight it with a circle. This candle is the candle I'm looking for, a strong bullish candle that smashes through the resistance area in an area, in a bigger area where divergence has occurred. So I would be very, very confident to take this trade. So honestly, I would open my trade around this area right here at the top of this candle where it closed. I would still put my stop loss under the resistance area, because this was a previously resistance area, but now as we went through it, it's now going to act as a support area. Okay, so my target profit would be these highs. I would aim to get these highs as a part of my target. So this is a 3-to-1 risk reward ratio, which is honestly a perfect trade. So if we let this trade run to see just what would happen, and was the divergence valid, And as we could see that the divergence was very valid, and we ended up eventually hitting through our target profit right here. And not just that, if you could see, we would also form an uptrend, a very clear and reliable uptrend, and as you can see, price has strongly reversed from a downtrend into an uptrend. So this is honestly the best way you could use the RSI. The RSI indicator is the best indicator at spotting divergence, and trust me, try it out and keep on testing it. And if you incorporate the RSI divergence into your trading strategy, you're going to be a much better trader, and your trading strategy would have a much higher win rate.